Jeff Bezos is saying that right now the stock market looks dangerously similar to what it looked like in the year 2000 when we had that massive, massive crash.
In the year 2000, when the internet bubble burst, Amazon's stock, in a very short period of time, went from $113 a share to $6 a share.
So, what happened in 1999 for a company as transformational as Amazon? It's honestly insane. This is what Bezos was talking about. You could see that Amazon pumped from 1997 all the way into 1999 up over 5,900%. An absolutely insane move in just a couple years. But look at what happened on the downside, a 93.9% stock market crash on Amazon. How is that possible? How can a stock possibly go up so much just to get reversed and go pretty much straight down? Jeff is going to break all this down for us. I think this is honestly a very, very, very important interview to listen to. As he talks, I'll break it down. It's all really good stuff here. Let's have a listen.
But to go from 113 to 6 in a short period of time was very concerning, and shareholders were upset, employees were nervous. We had all of our employee base, their parents were all calling our employees and saying, "Are you okay?" This was the environment of great nervousness. But I looked at the numbers in the business, and every month, as the stock price went from 113 to 6, a number of customers went up every month. Our gross profits went up every month. Our operating expense, we were still in a loss position, but our losses as a percentage of sales went down every month. Every single business metric, new customers, customer repeat purchases, everything that we were monitoring through that entire period kept getting better. And so that's one observation about bubbles in general. The fundamentals can be disconnected, the fundamentals of the business. And of course, as entrepreneurs, you're focused on the fundamentals of the business. The stock price is an output, an ultimate output that you actually have very little control over. Benjamin Graham, the great investor, is famous for saying, in the short term, the stock market is a voting machine. In the long term, it's a weighing machine.
When I preach on this channel, the fundamentals matter, it's because they do. Yes, the stocks have been going up like crazy lately. Yes, it seems like fundamentals don't matter because in the short term, they really don't matter. It's just fear and greed. It's hype and euphoria. That's what's pushing stock prices higher. Yes, AI is great. Yes, NVIDIA is great. Yes, AMD is great. Yes, TSM is great. All these companies are doing very, very well right now. But you have to understand the fundamentals will matter at some point in time. Eventually, we're going to take these stocks, put them on a scale and weigh them and say, this is how much the share price should actually be. And that's when we're going to find out who has their pants down. And I get it. Just look at this insane pump that happened in just a couple years. So many people made so much money. Your neighbors were making money. Your colleagues were making money. People probably quit their job. And you're just like, dang it, I want to FOMO in and I want to make money on this pump. But you're not really sure. And just look at these pumps and dumps that happen right here. Like if we just look at this mid-cycle dump that happened, this was a 58% stock market dip on Amazon before the big dip even happened. So just look at how investors are really so confused how to price this stock in. It's like it goes all the way up 5,900%, then it falls 58%, then it goes up again, and then it falls 93%. It just shows you that humans, when they get emotional and when they get irrational, they really have no clue what they're doing. It's like anything with .com behind the name. Here, take our money, invest it because we know it's going to 10x. And then eventually the crash happens and everybody gets wiped out. So do we feel like that's similar to right now where it's anything with AI behind the name is pretty much getting a 10x and getting all the investor funding that they want? Potentially. And Jeff Bezos is probably going to be one of the best people to talk to about this because he's been through it. Amazon has been through this. How does this relate to right now in the stock market? Let's listen.
And so as founders and entrepreneurs and business people, our job is to build a heavy company. We want to build a company that when it is weighed, it is a very heavy company. We do not want to focus on the stock price. And so that is, that will be misleading because it can be disconnected from the fundamentals. And when bubbles happen, so that's one thing that happens. The second thing that happens when people get very excited, as they are today about artificial intelligence, for example, is every experiment gets funded. Every company gets funded. The good ideas and the bad ideas. And investors have a hard time in the middle of this excitement distinguishing between the good ideas and the bad ideas. And so that's also probably happening today.
So, like we were saying earlier, any company that had a .com behind the name going into the .com crash, everybody was just saying, "Take my money, I'll invest in it. This is going to be the future. It's the best thing since sliced bread." There is similarities to that right now. There are companies that have just a few employees that are getting multi-billion-dollar valuations with no revenue, no earnings per share, but just a simple concept. That becomes a little bit concerning.
But it doesn't mean that anything that's happening isn't real. Like, AI is real, and it is going to change every industry. In fact, it's a very unusual technology in that regard, in that it's a horizontal enabling layer. Today we talk about AI first companies like OpenAI and Anthropic and Mistral and so on and so on and so on. There are so many startup companies that are kind of AI companies of various kinds. And that's normal for this phase. But that is not the biggest impact that AI is going to have. The biggest impact that AI is going to have is it is going to affect every company in the world. It is going to make their quality go up and their productivity go up. I mean, by every company, I literally mean every company, every manufacturing company, every hotel, every consumer products company, et cetera, et cetera, et cetera. And so that is hard to fathom, but it's real. There is no doubt. We don't know how long it will take exactly. We don't know how quickly that transition will occur. It'll probably occur at different rates in different industries. But that is very real. Now, what the stock market does, which is when we think of bubbles, we think of valuations and market caps and things like this, and how many billions of dollars are being invested in these 6 people at a $20 billion valuation, even though they just started yesterday, right? That's very unusual behavior. Investors don't usually give a team of 6 people a couple of $1 billion with no product. It's rare, and that's happening today. But the great thing about industrial bubbles.
So, real quick before we dive into that industrial bubble, which is what he's considering us to be in right now, he was talking about this idea that it's not like AI is not real. AI is very real. Self-driving cars, robotics, agents, whatever. It's going to make businesses so much more efficient, which probably will boost earnings per share. But the thing about it is, just because it's real, it doesn't mean the stock prices are going to just keep going up, up, and up. Eventually, these companies will be put on a scale and weighed for what they're truly worth. And that's exactly what happened in 1999. Look at the companies. Anything with the .com behind the name, it went straight up. But look at what happened to Amazon too. It did go straight up and straight down, but here it is still standing. But the vast majority of the companies in 1999, they are not still standing tall right now. So yes, some companies will make it, but most companies will not make it. So you have to be very, very careful before you invest in these AI startup companies.
This is a kind of industrial bubble as opposed to financial bubbles. And I'll tell you what I mean by that. If you go back, like the 90s had a biotech bubble. And there were a bunch of pharma startup companies that were designing drugs and using new techniques, and the world got very excited. The investment world got very excited. As a group, they all lost money. But we did get a couple of life-saving drugs. A bubble like a banking bubble, the crisis in the banking system, that's just bad. That's like 2008. And so those bubbles society wants to avoid. The ones that are industrial are not nearly as bad. They could even be good, because when the dust settles and you see who are the winners, society benefits from those inventions. They still get those life-saving drugs. And that's what's going to happen here too. This is real. The benefits to society from AI are going to be gigantic.
I agree 100% with what Jeff just said right here. AI is going to be so transformational. It's probably going to make our lives so much better than what it is right now going into the future. And if you're a CEO, you're like, heck yeah, I'm going to do AI, because I could have agents and humanoid robots that I have to pay a fraction of what I have to pay a human. So yes, earnings per share might go up in those businesses, but also the economy, there could be downside things to consider, because it's like, if you don't have to have as many human workers out there, Where are they going to work? What are they going to do? I don't think this is going to be a problem that we have to worry about in the next 5 years, but I think in the next 10 years, we will see the unemployment rate start to go up a little bit because simply AI is taking over. We'll see how it plays out. Remember this video in 10 years from right now. That's what I think is going to happen. But there is one critical part left of this interview with Jeff Bezos that's really going to lay out overall how this is probably going to pan out.
And if we go back 25 years ago, when the internet was in that bubblish moment, no one would have predicted a lot of the industrial benefits of that industrial bubble. And the fiber, huge investments that were put in infrastructure.
It's a perfect example that all of that fiber optic cable that got laid, and by the way, the companies who laid all that cable went out of business. They literally went bankrupt. But the fiber optic cable was still there, and we got to use it.
And the telco companies who owned the customers and who had a very strong moat ended up not being the companies that emerged.
That's right.
You might not think this is one of the most important parts, but I really think it is because it is so hard to know right now. Like even if you talk to Lisa Su, the AMD CEO, or Jensen Huang, the NVIDIA CEO, nobody really knows where AI is going to be in 5 or 10 years from right now. So if we agree that we don't really know exactly where it's going to be because we really don't, it's hard to build a lot of conviction and put so much of your money in one single company to know, hey, how is this going to be in 10 years from right now? So that's why I like to spread it out a little bit. Don't put all your money in NVIDIA. Don't put all your money in AMD. Like TSM, I don't know. TSM is really, really good because they own so much of the data center build out for the chips. But it's like, what happens if the build out slows? What if we don't need as many chips? What if we have another DeepSeek moment where it's like, AI inferencing is going to be so much less compute that we don't need as many chips. Like it's so hard to know. So that's why I'm really big right now on just building your base portfolio. I talk about the S&P 500 a lot, the NASDAQ a lot. I've been talking about buying bonds a lot right now because if interest rates fall, if the economy happens to take a dip, bond yields are probably going to fall because the Fed's going to cut interest rates, but bond prices will go up. So if you buy a ticker like BLV is one of the tickers that I've been putting some money into, if yields happen to fall for whatever reason, like I just said, you should capture a little bit of appreciation on that on top of the little 5% dividend yield that we're getting monthly. But again, there's still a lot of opportunity out there. And just today at the time of recording this video, I sold like almost $40,000 worth of put options. I literally collected that cash flow in my account immediately, and I could go do whatever I want with it. If you want to learn more about how I did that, click the link below, come to my course, and come in my Discord. You could see all my stuff in real time. 100% free for the first couple days. But if you want to watch a video of me explaining this a little bit more, watch this video right here. It's how I made over $50,000 on United Health. I'll see you there.